Good afternoon, everyone. We'll just wait for a few more seconds for everyone to come in this informative, interactive webinar that we have for you today with one of our best consultants in operations and strategy, Ricardo Nowak, in presenting today's conversation of how to make your business profitable and grow. My name is Jesus Padilla. I am the assistant director here at the Florida SBDC at FIU, and I'll be moderating any questions, concerns throughout today's conversation. So this is a good opportunity to introduce yourself. What type of business you have, what industry you're in, what are some challenges, or even what are some strategies that you would like to accomplish at the end of this year, and you could definitely implement some of your goals for 2027. This is a good opportunity to input your information so that throughout today's slides and presentation, I'll be able to moderate them and provide some examples with Ricardo's feedback, experience, and insight as a follow-on conversation after today. Some general housekeeping items. If you have any questions, concerns, don't hesitate. Please put your questions in the Q&A, and I'll be more than happy to moderate those questions for you. Also, this is a recorded webinar, so all participants will be receiving today's recording along with the presentation and definitely the link to our YouTube channel. So definitely encourage you to like and subscribe. We have a plethora of a lot of library and pre-recorded webinars as a library to help you to enhance the conversation with our business consultants. And if you're not a client of the Florida SBDC at FIU or the SBDC network, don't hesitate. I'll be putting the link also in the chat so that will provide the next steps on how to scale your business as well. So once again, my name is Jesus Padilla. I am the assistant director here at the Florida SBDC at FIU. I definitely see some familiar faces. Nice to see you again. And without further ado, we'll go ahead with some general presentation of who is the SBDC, what we do, and how we can assist you with your business needs. Next slide, Ricardo. Okay. So a brief description of the Florida SBDC network. We're funded through a cooperative agreement with the U.S. Small Business Administration. Next slide. So I know, so we're your local SBDC if your business is located here in Miami-Dade, Monroe County. If you're looking to expand your business to other parts of the state of Florida, by all means, I am more than happy to connect you with your local SBDC. And I know that some of you are outside the state of Florida. Don't worry, I'll be more than happy to connect you with your local SBDC in your respected state. Also, some of the growth strategies in terms of how to scale your business is also doing business with the government. The Florida Apex Accelerator Program provides no-cost consulting and training and information to help your business to how to solicit, how to scale your business on a state, local, and federal opportunities for government contracting. So a brief description of the Florida SBDC at FIU. In 2014, our center opened to work with businesses here in Miami-Dade County. And in 2018, we expanded down to the Florida Keys. In doing so, the services that we provide is the one-on-one business consulting, in which Ricardo is one of our growth strategist consultants, along with other consultants that do startup assistance, access to capital. I know I had a question about how to find access to capital. That's when one of our consultants could definitely assist you with the appropriate financial strategies to scale your business, along with the international trade, government contracting, along with the data, the market research in terms of how do you scale this business, or I have these demographics, how to provide that market research. That's what we have consultants that can assist you to alleviate those pain points for you, along with the trainings and workshops as what you're here present today as well. As a result, since 2014, we have worked with over 8,900 small businesses. As a result, it has generated, created, and also retained over 28,000 jobs. That is the overall economic impact that our consultants, as such, the guide has provided those strategies, those innovative tips for you to not only to scale, but also to create jobs in the local economic community. As a result, with the hard work of our consultants, but also you, the small business owners, we were recognized as the 2023 SBA Center of the Year. Along with Ricardo, we also have 18 specialized consultants to assist you once again in access to capital, marketing, strategy, government contracting. So all the different facets of what small business entails, we have a specialized consultant to assist you for the exception of legal and accounting. That's when we have referral partners that could definitely assist you in that regard. But like I said, it's a no-cost consulting to assist your businesses to grow and succeed. And without further ado, allow me to reintroduce you to Ricardo Nowak, that he'll be providing today's presentation. But like I said, if there's any questions throughout today's conversation, don't hesitate, put in the Q&A or in the chat. I'll be moderating those questions for you, and I'll be more than happy to assist you with the best I can. So without further ado, Ricardo Nowak, the floor is yours.
Thank you, Jesus, and thank you to all the attendees. We're going to spend some time today trying to share some ideas that you can put to work, try to be as practical and effective as possible, trying to get your business profitable and grow. A little bit about myself. I spent most of my career at large corporations, and then for the last many years, I've been consulting with small and medium-sized businesses. I really, among the many things I learned, there's many things that large corporations use and apply that can be adapted to small and medium-sized businesses. And there are many others that we don't want to touch. So large corporations have some pluses and minuses. And the challenge I enjoy is to take those pluses and figure out a way to put them at the disposal of medium and small size businesses. So they, as I said in the heading, can grow and be profitable. So let me start with try to be as simplified as possible. So something is not that simple, but the business cycle is a continuum of interconnected steps building on each other. So how we start a company, you invest, you make something or you buy something, and then you sell something. Hopefully you sell at a profit. That profit generates cash, and that cash allow you to reinvest in the business and get the cycle moving. So it's a simplified picture, but portrays the essentials that the way a business operates. I want to highlight that any failed step impacts the outcome. So if you don't invest properly, or you don't make properly, or you don't buy properly, or you don't sell what you need to sell at the price you need to sell, so you fail to generate profit. If you fail to generate cash, the whole cycle comes to a standstill. So it's very important to get a holistic view of how the company operates and understand all the pieces. And that's a big challenge for small entrepreneurs that maybe are very good at a certain trade. They know how to make or to buy something. Maybe some of them know how to sell, but when you get into terms of the financials, becomes a challenge. So let's look at which are the key profit drivers. Sales volume, prices, cost, expenses, and profit. Each of them need to work properly if your company is going to become profitable. They're all needed. If you don't sell enough volume, if your prices are not correct, if your costs are too high, if your expenses are high, then you don't deliver the profit. And I'm separating here costs that are primarily variable costs from expenses that are fixed expenses. So it is crucial to get the relevant data to understand if we are doing what we need to do for each of these drivers, and if not, to do something about it. The other thing I want to emphasize, you need to focus on what you can control. Many times entrepreneurs complain about the economy, about the weather, about the government, about regulation. All that is true, but there's nothing you can do about it. So the key thing is put all your focus, all your attention, what you can control. And usually many of these elements here on the chart are things you can control. You cannot control the macroeconomy. You cannot control tariffs imposed by the government. You cannot control wars. You cannot impact regulations. So you need to live with that. That's the reality of the world in which we operate. So given those variables, what can you do within those to make your business successful? And adapt to what you cannot control and drive what you can control. Now, there's a distinction between profit and cash. It might be obvious to some of you, might not be so obvious to some other ones. So let me try to, the same way we talk about the profit drivers, let me talk about the cash drivers. How you generate cash? First and foremost, generate profit. Another way, with lower working capital. What's working capital? Primarily account receivables, inventory, and accounts payable. So the higher your account receivables, the higher your inventory, more working capital you need. Conversely, the higher accounts payable, how long you can wait to pay your vendors, you need less cash. Then you have investors, outside people that put money into your business, they fund the business. You can also borrow money, and that generates cash. It's not free, but you can generate cash. And if you have some spare fixed assets, you can sell fixed assets. Now, where do the cash go? If you lose money, that eventually results in cash. If your working capital is higher, you need more cash. If you do distributions of the profit or pay dividends, depending on the type of corporation you have, you're using cash. If instead of borrowing, it's time to repay your debt, you're using cash. If you buy fixed assets, you need to use cash. So it's very important and to be conscious that each of these things in and by itself are what drives, what generate or uses cash. And just a comment, in the short term, you can make profit without generating cash. So what would that be? Because you generate cash, but you use it to increase your inventory or increase your account receivables. So eventually, even if you make profit and don't correct where that cash goes, you might end up being a profitable company, but short of cash. Conversely, short term, you can lose money and generate cash. How could that be? Well, you might not make enough profit, but if you lower your receivables, if you lower your inventory, then you generate cash. So those are some short-term situations. Longer term, profit results in cash, losses result in cash use. So let's look specifically at cash cycle. And this is very important because usually business die not because of lack of profit, but because of lack of cash. So this is an oversimplified picture, and I did not put a time scale. So let's go back to the cycle we talked about before. The company buys from a vendor, you receive the goods, you pay the goods, then you sell the goods, then you ship them, you invoice, and you collect. The difference between the time you buy and the time you pay, as shown on the left bottom, is the accounts payable. The goods that you receive until you ship are sitting in your inventory. If you go to the right, what happens between your invoice and your collection is your account receivables. The time lag between the time you pay and the time you collect is the cash cycle. That is what takes your cash. So if you look at the arrows, if you can move the pay to the right, you shorten the cash cycle. If you can move the collect to the left, you shorten the life cycle. So how do you translate that? If you can pay your vendor not when you buy, because some vendors pay money in advance, not when you receive, but maybe you can get some terms. Then by delaying your payment to the vendor within the agreed upon terms, you don't want to default, you shorten the cash cycle. Then if you can move the collect to the left, you improve that means you can sell and collect right away, or you can collect when you ship, you can collect when your invoice, or sometimes you give terms to your clients, 30 days, 60 days. So you need to understand the time scale of this chart. The time scale of this chart will tell you how much cash you need to keep your business running. And as you can see here, this is separate from the profit you generate. You generate profit, you generate cash, and that cash can be used for one of these things, and that cash use can be more or less depending how you manage when you pay your vendors and when you collect from your clients. So the outcome is what I call a spiral. If you generate profit, you generate cash, you reinvest, and the business grows. If you get what I call a vicious spiral, you start losing money, you start using cash, and the business shrinks and eventually disappear. And I put a spiral there because a lot of momentum here. Once you start generating profit and cash, it is like a flying wheel. The business gets momentum, and next cycle you generate more profit and more cash, and you reinvest, and the business keeps growing. In the reverse, if you start losing money and using cash, it's very hard to reverse. So the flying wheel moves in the opposite direction, and it's very hard to stop it. That's why it's so crucial that maybe it's better to go slowly but surely to make sure you don't get into a vicious spiral. So, which are some of the key success factors to reach that goal of profit and growth? You need a strategy, you need a proper execution, you need to measure your performance, and once you know what's going right or wrong, you need to correct, you need to adapt, you need to innovate, and you need to pivot. So this is a simplified chart, and within each of those boxes, there are a lot of important components. Within strategy, you need a business strategy, you need a marketing strategy, you need a finance strategy. And doesn't have to be very complicated or very sophisticated. Every business, as small as it might be, has a strategy. The issue is to make sure you understand what it is, because if you do nothing, by default, you're setting a strategy that's probably not the right one. The strategy key elements for success are to be clear, you be very well defined, and would include your goals. What do you want to achieve with your business? Then you have execution. No matter what your strategy is, you need to execute properly. That is how to get to your goals. How do you make sure you have operational efficiency, that you don't have more expenses than you need, that you don't have resources that are not appropriate, that you don't spend more time that is necessary. So without proper execution, very seldom a strategy works. After you execute, you need to measure your performance. Did you achieve the goals? If not, where? How? What did you fall short? I want to emphasize, and I'll be doing again, you need to measure. What you don't measure, you can't control. What you don't measure, you can't say if it's going right or going wrong. If you don't measure, you don't know how to improve. You don't know where the problem is. You see the end result and says, what happened? Why am I here? So measuring the key elements that make your business succeed is crucial. And finally, probably the most difficult part for entrepreneurs is to correct, adapt, innovate, and pivot. There are certain things that happen in your business, certain things that happen in the environment, certain things happen in the marketplace that indicate that what you were doing probably needs to be done differently. You need to be open-minded. You need to be willing to accept that maybe your original idea was not correct, or something changed in the environment, you need to adapt. And at the same you adapt, you need to innovate. Look at new ideas, new concepts, new approaches, new ways of doing what you were doing or doing different things. And don't be afraid to pivot. Many businesses succeed by pivoting. I think the example you probably heard a lot is about during COVID, restaurants that they had to close down, but they pivot to delivery. So that's an example how to change the strategy, change the approach to survive, and the circumstances around the business, around you, change over time. So let's start with the business strategy. Which are the key components of the business strategy? First, you need to define the product or service you sell. And as simple as this looks, you probably not aware how many companies have a very fuzzy definition of the product they sell, of the service they sell. And if you cannot properly define what it is that you're trying to sell, imagine that the customer will not understand it either. You need to establish goals for your business. And I think the most important one here is you're going to scale the business or not. Many entrepreneurs really, whether they accept it or not, manage the business as a job. That means they probably clear enough money to survive, maybe not enough, maybe a little bit more. But between surviving at a certain size and scaling that is growing significantly over time, they're two totally different approaches. And it's very important for entrepreneurs not to deceive themselves. If you are happy with what you are, just stick to it. If you really want to scale, you need to be open and willing to change, accept new risks, take new initiatives. And it's a totally very different business approach. You need to understand the market segmentation. Another important comment, you cannot sell everything to everybody. You need to look at the geography, the location, the age, the income of the people who are the natural buyers for your products. Not all products are for all ages, for all locations, or for all income levels. Understand where yours fit. And that takes me to the next one, the target market. We need to work with a given niche. Small businesses need to target a niche. You need to be narrow and deep. And that's another concept that sounds counterintuitive and that many entrepreneurs are reluctant to embrace. Don't try to go for the big thing where you are just a small player among big players. You'll never be able to stand out. Just to be the best at something very narrow, very small, but the emphasis is be the best. And that takes us to the competitive advantage. That basically is why would clients, customers buy from you instead of from somebody else. And something crucial here, write it down. Don't just talk about articulate. Write down what would be the message to a client or a customer that communicates, you need to buy from me and not from everybody else. And the reason is because I do this, and that better than anybody else. Write it down, focus on it, make sure that is something that your clients can understand. And be careful if it's something that can be easily copied, because you might have a competitive advantage and tomorrow a competitor comes up with something very similar and you need to maybe change or adapt. But the more niche-oriented your business is, the easier it is to have a compelling business proposition. Next one is develop a viable business model. You can have a great product, a great marketing concept. If your prices are not right, either you're pricing yourself out of the market or you're not making enough money. If your costs are too high, if your expenses are too high, the business will not be successful. So you need to have, after you cover everything else, the business model should be viable. And as I said and repeat, focus, focus, focus. Don't try to be everything to everybody. Try to tailor your strategy to your market niche. Try to tailor your price to the market niche, your marketing strategy. Everything has to be coherent, focusing on maybe a relatively narrow piece of the market, but you will have all the tools to succeed. Next, the marketing strategy. You need to know the answer to these questions. Who are your customers? How do you find your customers? How do they find you? Why do they buy from you instead of buying from somebody else? How do they buy from you? Do they come back? So, who are your customers? Do you want to have few customers, many customers? Are you going to do business to business, business to consumer, business to government? Don't try to do everything. Many people believe if I do everything, I'm going to sell more. That's not true. Understand what your customers want, focus on them, satisfy them. Don't try to be everything to everybody. And you might be very successful with few customers or with many customers, depending on the type of product you sell. How do they find them? How do they find you? Is this something you can do online? You need a direct sales force. You need distributors. Again, depends on all of them are viable. You can just base your business on your website and social media, or you can have a brick and mortar, or you can have distributors that do the work for you. And be careful, if you have more than one of these channels, there's an eventual channel conflict you need to manage. So why do they buy from you? This goes back to the competitive advantage. You should be able to articulate, why do they buy from me? What's my compelling business proposition that brings customers back and back and back to me? And then how do they buy from you? As I said before, some business they do only online. Some other business have their own stores. Some other business just third-party stores. So it's online, it's brick and mortar, it's a combination of both. Understand what you want and what's best for your products and your clients. And lastly, do they come back? There's a very high customer acquisition cost in almost all businesses. So once you have a customer, keep it. It's much easier, much cheaper to keep a customer than to get a new one. Once you lose it, it's very expensive to get another one to replace that customer. How do you learn if they come back? Develop a customer database. You need to know who your customers are. Depending on the type of business, you might even know them one by one, by name, and you can track, do they come back? Do they don't come back? Do I follow up and say you haven't come in 3 months or 6 months? So some businesses can do that if the market strategy is for few customers. You have a lot of customers, you can have some loyalty programs that you track with points or whatever if they're coming back. It's very important to know if your customers come back. And then once you know if they're not coming back, the next step is to find out why are they not coming back. It's very easy for many businesses to be able to get customers to try it, but to keep stable and loyal customers is much more difficult. And the third leg of this strategy thing is the business model. And there's not only one model, there are many models. And I'm putting here some two extremes. Most businesses are in between. So what's the business model? You look at your sales, your cost, the variable cost, The difference between sales and cost is gross profit. And the gross profit divided by your sales is gross margin. And this is a very important concept that not every entrepreneur grasps. Gross margin is a key measure because, as I said at the bottom, the gross profit should be enough to cover your fixed expenses and generate profit. So the gross margin, let's look on the left, 80% means that for each dollar of sales, you keep 80 cents. And those 80 cents should be enough to pay your fixed expenses, 70 example, and leave 10. And you have a net margin of 10. Now, if you go to the right-hand side, you still get to the same 10 with a totally different model. That is, your sales are still 100, but your cost instead of 20 is 70. So your margin is 30%. But again, if your expenses are only 20 instead of 70, you make the same 10%. So you need to understand what's variable cost versus fixed expenses, because the variable cost drives your gross profit and your gross margin. And that means that if for each dollar of sales, I keep 80 cents, the more I sell, the more I'm growing my gross profit. And my expenses should not grow as much of the sales. So there's a big leverage there in terms of holding your fixed expenses flat and growing your revenue and therefore your gross margin. So some examples, for instance, high gross margin, high expenses. These are usually specialty products. These are products very unique that can command a premium, even though usually the cost base is much higher. I know, if we look at cars, this would be, for instance, a Ferrari. A low gross margin, low expense is a business that most likely is a commodity. A commodity is something that's very hard to differentiate one from the other. So usually you cannot command such a high gross margin, but usually they require lower expenses. So I don't know, the first example is a Ferrari, maybe the second one is a Toyota, where you cannot command a high gross profit, but maybe the expenses are not that high as the other very expensive one. Another case might be a cruise line. You have companies that have very high prices and probably very high gross profit, and that could be, I don't know, something like Regent Cruises. And on the other hand, you have something that maybe the price cannot be that high, the gross margin is lower, therefore, but the expenses are not that bad. And that could be something like Carnival. Or other way to put it, you can have a cruise ship for 5,000 people, another one is only for 500 people. So the one for 500 people has much lower expenses, but you command a higher price or not. So you need to look at the expenses, look at the gross margin, and either one is good. At the end of the day, you get the 10% back. But understand where you fall here and somewhere in the middle, so you can understand what kind of expenses you can afford for a certain gross margin. Again, I emphasize, keep the eye on the gross margin. That's a very important concept that makes you understand how the financials of your business operate. So the next big driver of success is execution. So what you need for a successful execution? You need the resources, physical resources, human resources, technology. And this encompasses, do you have a warehouse? Do you have the proper employees? You have the proper number of employees? Are they properly qualified? You have the technology. These days, that means AI. Are you proficient in AI? Do you know how AI can help your business? All those are resources, all those elements that help you execute your strategy. Once you have the resources, you need to use them appropriately. That's operational efficiency. If you can do with one employee what now you have two doing, find a way to do it. It's challenging, but this is a constant, never-ending process of seeking efficiency in your operation. The third key element of go-to-market is channels, as I said before. You go directly online, use distributors, you have your own stores. You need to do that right. If you choose the wrong channel for the product, then it won't sell. And maybe the problem is not the product, but you're trying to sell it wrong way. Certain products yield themselves to operate very well online, other ones not. Some other ones people want to go and touch them, browse them, and really look what they're buying. See what channel is right for your product. Next one is accountability. You need to make sure people are responsible for certain tasks or certain deliverables. Small companies don't have that larger staff, but even if I have 1, 2, or 3 employees, make sure each one knows what they're supposed to do. They know what the deliverables are, measure those deliverables, and make sure you give them feedback. Yes, you're doing right. No, you're not doing right. You should do this or do the other. Processes is another word for organization. Organize what you're doing. Just to make sure you have repeated and clear processes. Organize who's doing what, when do I need to process this, when do I need to accelerate something, when I need to delay something. Is this thing organized? When a customer comes in, do I have a consistent way of handling the customer on the invoice or the collections? Performance measurement is, we mentioned this before. If you don't measure, you don't control. If you don't control, you don't improve. So measure the results, compare with your goals, and figure out what's coming, what's preventing you from delivering the goals, or what's allowing you to delivering the goals. And then corrective action. The basis here is, if you keep doing the same, you're going to get the same outcome. So if you want to change what you're getting out of your business, you need to do something different. And that's where the corrective action comes. And to take proper corrective action, you need proper performance measurement. So,
And Ricardo, I have a question for you before you proceed.
sure.
In terms of the overall business model and the expectations, at what point do you decide to reevaluate or change the business model, or to stay with the plan and collect the data?
Sorry, can you repeat that, Jesus?
Yeah. So at what point do you decide to reevaluate or change the business model, or to stay with the plan and collect the data?
Okay, so if you don't collect the data, you don't know what's happening. So you might see the end result. You have a certain strategy, a certain business, and you're losing money. So you can say, I'll scrap the business because it's no good. But if you got the data, you can say, I have a good product, but the cost of producing that product or sourcing that product is too high. Or I have the right product, maybe the right cost, but my marketing cost is too high because maybe I'm spending where I shouldn't be spending. Maybe I should be spending somewhere else. And that probably doesn't work. Or your expenses are too high. Maybe you have a big warehouse that you don't need. Or maybe your customers are not coming back. So you need to measure those things and say, am I still on the right track? By my strategy is correct, my execution is wrong, or my execution is okay, my strategy is wrong. So you need that data to decide. I need to pivot, I need to change, or let me take green step. Let me fix this if the outcome comes better, and if not, you need to change. So understand where you're standing, and based on that, decide I can keep going, changing this and that, or I'm going the wrong way. I need to make some more drastic action to change my business model. So back to performance measurement. Financial statements is another key weaknesses of most entrepreneurs. Unfortunately, financial literacy is not something very common among entrepreneurs. Therefore, they either ignore financial statement, they don't have financial statements, or they delegate that to an accountant that does nothing for the business. If you don't have financial statement, those are basically two or three. One is what's called the profit and loss. That is the example that I show with the business model. That's a profit and loss. Another one is called balance sheet that shows what asset do you have and what money do you owe. And the third one is cash flow. So those are three key things. And you need to have them, you need to read them, and you need to understand them. So there are two ways to do it. One is if you don't have the financial literacy, educate yourself. And as Jesus said, he has plenty of seminars and webinars where you can learn how to do it. If not, you need to bring somebody to the business that knows how to do it. The only point you cannot do is ignore it. If you don't understand your financials, then you're totally in the dark. So learn yourself how to manage them, or if not, bring somebody who can analyze them for you, explain to you. And once you understand that, that gives you key ideas of where my problem is, if I have a problem. But don't ignore them. You cannot ignore financial statements. The second key pillar here is the customer base. You need to know who buys, when do they buy, what do they come back? And again, this is very different for different customers. If you, I know, have a restaurant, the customer database maybe it's wide, and maybe a loyalty system allows you to know how this works. If you have a smaller business, I don't know, your rent, let's just say it would be, you have a lab, a dental lab, where the number of customers is 20 or 30, then you can track each one. So depending whether you have a customer database of 10, 100, or 10, or 1,000, there are different ways of tracking this, but you need to know who your customers are they coming back? And if you can understand why they're coming back or they are not coming back, that gives you a leg up to decide where to go. And then besides those two standard ones, there are KPIs. KPIs, key performance indicators. Key performance, and each business has its own. Depending on what type of business, there are different key elements to measure. But something that's very helpful here is what's called a Pareto distribution. You probably heard about it. Usually 80% of something represents 20% of the outcome. So usually 80% of your clients or 20% of your clients represent 80% of your revenue. If you have multiple products, usually 20% of your product represent 80% of the revenue. Try to understand what those 20% are. Understand who, if you have multiple products, which are the key products that drive your sales. Understand who are the key customers that drive your sales. And even better, if you can organize by gross profit, understand which are the key products or key customers that drive your gross profit. But again, that's important in terms of sales, in terms of profit, but that applies to almost everything. Are my salespeople efficient? And I'm using, if I have some expensive machine, am I using it enough, or I should find another way to use it partially? When my people working, do they work 8 hours or they work only 5 or 6? So depending on the business, there are very few things that are crucial that you need to, don't try to measure everything, but really measure what is really important. And finally, you need to adapt, pivot, or innovate. And what prompts you to do this? There's a product obsolescence. You have a great product, but the technology keeps evolving, something new comes up. So all of a sudden, your product that was a hot item is not hot anymore. Competitive landscape, a new competitor comes in with a better widget, a better idea, a better marketing approach. You need to do something. If not, the business suffers. Supply chain disruptions, just as I said, we have COVID, we have wars, you have tariffs. You need to react. If China is closed, try to find another supplier somewhere else. So be ready to understand what's going on, adapt, If you need, pivot. If not, innovate, create something new. Environmental restrictions might be permits, it might be climate events. That might be a drought, or might be a lot of rain, or might be a fire. There's things you can't control. Same thing with government regulations. As I said, tariffs of new regulation that change every day. The key thing here is focus on what you can control rather than complaining about what you can't control. And when something you can control changes, be ready to adapt, pivot, and innovate. Don't attempt to change things that are beyond your control. Accept them and manage the things you can control within the limitation of those you cannot control. Okay, and finally, what I would like to have as key takeaways for you to take from this presentation. Determine your business goals. You want to scale, or you are happy as you are and your business is a job, you don't have a boss, but you do something you like, you enjoy, and have enough money to live. There's nothing wrong with that. Don't kid yourself. If you want to scale the business, it's a totally different business approach. Second, you need a product service that satisfies customer needs. It's not what you think the customer needs, it's what the customer believes he needs. So many times, if what you're selling or delivering doesn't fly, it's maybe because there's not a specific customer need that's satisfied. Third, define your target market, niche. Don't be afraid of narrowing your target. Don't try to be everything for everybody. Be the best for a narrow segment of the market. Then understand your competitive advantage. Write down why customers should buy from you. And again, focus on the specific customers you want to go after. Don't focus on everybody, because then there's no competitive advantage. The competitive advantage is for what you want to do with your current customers. Then you have to ensure you have a viable financial model. That means you need to make profit, net profit at the end. And there are many ways of doing it. You can just have high gross margin if you have high expenses that you need to cover. But if your expenses are low, you can have a low gross margin. In any case, you need a lot of sales, but the composition of those sales differs depending on your business model. Then measure key performance indicators. I said before, if you don't measure what's going on, you don't know if you're on the right track, on the wrong track, if you're going to crash or you're flying. Measure what's important, the best way to evaluate your results. And finally, remain flexible and open to change. If you need to change, accept it. Accept that the situation is different and that you need to do something different. Okay, and with that, I'm gonna just go to questions. Jesus, I know if there are questions that you like
Yeah.
to share with me.
No, if you have any questions, I'll strongly encourage you to put it in the Q&A or throughout the chat. I'll be more happy to moderate them on your behalf. Ricardo, I definitely have some comments on your side from the attendees. Wow, thank you. That's what they're saying. They never had a Harvard MBA as an instructor before, so kudos to you, Ricardo. Um, but yeah, so definitely, I've been answering some of your questions already on the chat. So, like I said, we're here to help you. If there's any additional questions, strongly put them in the Q&A or in the chat. I'll be more than happy to moderate them on your behalf. I also put additional links in the chat, such as our upcoming events link. If you want to meet with our business consultants, all participants will be receiving the recording and the presentation as well. So, like I said, any way that we can do to assist you to pretty much end the year on a strong note, but at the same time start implementing some new strategies, some growth plans for 2027. We're here to guide you along the way. As I know some of you here. I always say that we serve as strangers, we're gonna leave as family. So any way that we can to assist you, by all means, we're more than happy to do so. At the same time, definitely encourage any small business owners, any of your colleagues who want to start a business or how to scale their business. By all means, feel free to connect me with them, and I'll be more happy to provide them the necessary steps for them to be successful. Ricardo, I have a comment or a question for you.
Yes.
Um, Ricardo, thank you so much for leading this webinar. I want to ask, I've been in business for 3 years now, but I have not never done a financial statement, cash flow, or balance sheet. Would you recommend to try and start getting those from 3 years ago or start today?
Um, I think you can start today. That's good. It's hard enough to start today. If you want to go back 3 years back, it's going to take you forever. So if you can get this going, and usually what small businesses use is something called QuickBooks. It's an easy to manage software, and we have one of our consultants is a specialist to that. So if you want to do that yourself, this consultant will help you set it up. Yeah, don't attempt to go back. Just start this year. That's going to be good enough. You can get it done.
Yeah. And then I'll put the link in the chat. So like that you could definitely email me and or also register for consultation. And I'll be more than happy to connect you with the appropriate consultant in that side. And then Ricardo, what are the three financial statements that were said?
This is the profit and loss. The profit and loss is the key one. Second will be the balance sheet. And the third one, that's probably is not that crucial, is cash flow because it's a little bit more challenging, but it's important. So profit and loss, balance sheet, and cash flow.
Yep. Thank you. And then at the same time, I also put some a small poll quiz on, for so we could get your feedback. How was the overall experience? Are there any additional topics that you would like to have covered that were not included? But at the same time, this definitely helps us to enhance the overall experience on how we can continue working with you, assisting you with your business needs. Ricardo, I might have a question. Okay, perfect. Thank you. Perfect. Let's see if I have any additional questions. No, I don't have no more questions. So I want to thank the Guido for today's presentation, but at the same time, I want to thank all the participants today in regards of how to scale your business, but at the same time, how to obtaining new strategies to become profitable and also to grow your business. So, like I said, anything that we can do to assist you, we're phone call and email, and also an event away. So I want to thank you all for attending today's webinar, and I'll be looking forward to seeing you at the next one. Thank you and have a good afternoon. Take care, everyone.